Good morning, everybody, and indeed, welcome to our investor education series. Yes, this is one of them. We've had several over this year, and this is again, we listened to you, we heard you, and we're bringing again one for you today, and we're glad you're here. Now, the topic for today's session is really how to unlock your portfolio potential. What does that mean? It means that you will learn how to maximize returns through multi-asset investing in the Nigerian capital market. Yes. My name is Ugochi Obi, and I oversee the affairs of the X Academy for the Nigerian Exchange. I know you can hear me, and I know you can see me. Yes, our network is that good here at the Exchange. I know that you can hear me and you can see me. Before I start, I'd like to say thank you to you for joining. You are the most important person here. And so we're glad to have you here. But I also would like to thank the participants that made sure that that worked with NGX tirelessly to ensure that this series holds just for you. So I'd like to thank Cardinal Stone Securities Limited, also Stanbic IBTC Asset Management, the Association of Securities Dealing House of Nigeria Action, of course, the Fund Managers Association of Nigeria, not forgetting the Central Securities Clearing System, PLC, CSS, and of course, our OGA, the Securities and Exchange Commission, SEC. So thank you. Thank you for working with us to make sure that this happens. Now, before we start, because today is fully packed, before we start, if you have a friend, if you know somebody you care for, and you want to help, get them to immediately register and join, because trust me, they will thank you later for all that you're going to hear today. This is your mindset will change totally. We have experts in the room that will speak to different things that you didn't know about the capital market. So to start with, it is always my pleasure to introduce the gentleman. I'll give the first opening remarks. It's always my privilege and pleasure to introduce to you the CEO of the Nigerian Exchange Limited, Mr. Jude Chemeka. Good morning, Jude.
Good morning, Gochi, and thank you so much for starting on a very high note. Good morning, distinguished ladies and gentlemen. On behalf of the board and management of the Nigerian Exchange Limited, it gives me great pleasure to welcome you all to today's webinar, themed Unlock Your Portfolio Potential, Maximizing Returns Through Multi-Asset Investing. I'm delighted to see such a strong turnout from our retail investors today. Your presence really demonstrates a commendable dedication to enhancing your financial literacy and investment knowledge, which is vital in our dynamic market. The Nigerian investment landscape has shown remarkable resilience, especially in recent times. Yesterday, the all-share index closed at 427.48 points, reflecting a year-to-date increase of 10%. This growth underscores NGX's position as a key driver of wealth creation, with a combined market capitalization of 122.25 trillion naira. This consistent growth is influenced not only by local market dynamics, but also by global trends and economic indicators. Now, excuse me, the all-share index did 10%, but within the basket of assets within the exchange, you will probably see companies that have done a whole lot better than that. For instance, Bitter Glass year to date in terms of capital appreciation has done about 259%. If you also look at Meristem Exchange Traded Fund, that fund ETF has done 260% return year to date. And for those who like to play safe, the federal government 2028 X1 bond has returned 88% year to date. As we navigate this dynamic environment, it's essential to recognize and celebrate the significant contributions of retail investors. Today marks a pivotal moment in Nigeria's capital market journey, where retail investors like yourselves are no longer passive participants, but active drivers of market growth and liquidity. In April 2025 alone, retail investors accounted for 43% of total equity market transactions, reflecting your growing influence and appetite for wealth creation through capital market participation. Now, if you look at the universe of investors in our market, it's 6.3 million retail investors. We think that figure can actually grow given the population of the country. And if we think about the number of active retail investors we have, is 692,000. So we believe that such engagement will really help to deepen market understanding, financial literacy, but beyond that, financial inclusion to increase the number of retail investors that we have in our market. Our product ecosystem continues to expand at the NGX, offering investors access to 148 listed companies across various boards, 149 fixed income securities, 12 exchange traded funds, 4 derivatives products. In addition, we have introduced innovative products such as green bonds and sustainability linked securities. With green bonds, we have 3 green bonds that are listed on our exchange, which has really helped provide access for investors to invest in sustainability linked products. And the total market cap of our green bond market is 29.83 billion naira. Now, reinforcing our commitment to sustainability and inclusivity, we have launched the NGX Impact Board, which was done in July 2024, providing a dedicated platform for sustainability-focused financial instruments. We are also preparing to introduce the non-interest finance board, designed to offer a specialized market for Sharia-compliant financial instruments, further deepening access to inclusive and responsible investing options. We are accurately aware of the macroeconomic challenges facing investors, including high inflation, which is currently at 23.17%, according to the National Bureau of Statistics, alongside currency volatility and the proliferation of unregulated investment schemes. These realities reinforce the importance of a well-regulated, transparent, and innovative capital market, which prioritizes investor protection and education. Hence why we're having all these investor education series. At NGX, our commitment to you remains unwavering. We continue to invest in cutting-edge technology, regulatory enhancements, and investor education to ensure that everyone, regardless of background, location, or experience, can confidently participate in the Nigerian capital market and build sustainable wealth. Today's webinar will explore the concept of multi-asset investing, a strategy that combines equities, bonds, exchange-traded funds, REITs, and other capital market products to enhance portfolio performance while effectively managing risk. The approach is particularly relevant for retail investors seeking to unlock their portfolio's full potential through diversification and strategic asset allocation. I'm particularly thrilled by the lineup of distinguished speakers that we have today as our panelists, whose expertise will undoubtedly provide you with practical insights and accessible resources to help you navigate the investment landscape with confidence. I do extend my heartfelt gratitude to our esteemed partners, the Securities and Exchange Commission, SEC, Association of Securities Dealing Houses of Nigeria, Action, Fund Managers Association of Nigeria, FMAN, Central Securities Clearing System, PLC, CSCS, Cardinal Stone Securities Limited, and Stanbic IBTC Asset Management for their invaluable contributions to this event and your unwavering support in advancing Nigeria's capital market. As we delve into today's discussion, I invite you all to actively participate, ask questions, engage our speakers, and explore the untapped potential within your portfolios. Thank you for joining us, and I wish you all an insightful and productive session. Ugochi, back to you.
Thank you so much, Jude. Thank you for that. And indeed, we're looking forward to listening to the experts that we have in the house to explain more about the multi-assets existing in the capital market. But just before then, I'd like to call on the CEO, the chairman of Action, Mr. Sam Onukwe, to please give us his own remarks.
Thank you, Gucci, for this wonderful opportunity that the exchange has created for our clients and indeed our members to learn more of the opportunities available in the market. It's very heartwarming to note that not just the NGX, but we have some partners that have spared their resources to be part of this. And thank you so much for organizing it. For us, it's a great opportunity to explore all the products, which most investors are not aware of, and also to construct portfolios that will really go beyond equities, take full advantage of opportunities in the equities, and of course, all the product lines that are available in the market. Those products are not very well known to many investors, and I think this webinar will be an opportunity to further educate such investors on these available opportunities. So I want to thank you. I thank the NGX for providing this opportunity. I want to thank all participants for the great interest. We have quite a lot of people on this webinar, and I hope that we do this often to increase the awareness and the participation in our market. Thank you, our partners, other partners, and especially Fund Managers Association, and and of course, our regular partners, Cardinal Stone, Stanbic, and CSCS. I think at the end of this, we will have a lot of takeaway, and investors, and indeed, market players will be very happy for this seminar. Thank you for the opportunity.
Thank you so much, Mr. Onukwe. And yes, we'll be running so many of this series, and that's why it's important that you get connected with the NGX so that immediately you get these links to join, you quickly register and send it to your network. Before we run into it, please locate the Q&A feature down at the bottom of the window of your Zoom window. And please drop your questions in there. We will address all of them. Get out your notebook and your pen because we are about to start. And to start it off, we're going to have a speak on navigating the NGX product ecosystem, investment options across the asset classes. You heard we have so many asset classes at the NGX. How do you navigate and how do you begin? And there is no better person to speak about this and the head trading and products at the NGX, Mr. Abimbola Babalola. We call him Pablo. Pablo, are you on? Are you here?
Yes, good morning, Chile, and good morning, all.
Good morning.
So this morning,
Please go on.
Thank you. This morning, I'll be talking and explaining to us some of the products that we offer at the Nigerian Exchange Limited, and also some of the characteristics or features of this product. Now, let me start by saying, when you are creating a portfolio, and you want a balanced and efficient portfolio, having understand your investment objective, the next thing is you want to put all these asset classes together and do your asset allocation. But another thing is, before you go into asset allocation, you want to see the capital market expectation in looking at what the performance of these various asset classes are. And today, I'm introducing you to some of those asset classes that we trade on. Some we will still introduce because, again, we do a lot of research, and based on what we perceive that investors will need, we introduce such instrument. In terms of the product that we offer today at NGX, we have equities, and these equities could cover ordinary shares that majority of us know. Preference shares too are allowed to be listed and traded in our market. We have what we call real estate investment trust. That is the ability, a product that offers you the opportunity to have or derive benefit by investing in real estate without buying a land and without even owning a property. We also have mutual funds that can be open-ended or closed-ended. We have fixed income. These are instruments that have predetermined return, and we could also invest in that. Exchange-traded funds are there, and also I'm going to speak to derivatives. But in terms of highlights, I think the CEO had alluded to some of these, but again, it's like we have equities, about 151 of them. Memorandum quotations, which are the mutual funds, we have 62 of them, 154 bonds, and exchange-traded funds, we have 12, and derivatives, we have 4. In terms of this product, equities, they are the various forms through which companies that produces a product or services get listed and traded in our exchange. They could come either through listings by introduction, by initial public offering, or a tender offer, or they do it right, like it happened when banks were doing a capital raise. And some of the benefits, shares is like you are participating in corporate democracy. You own a shares, you co-own it with others. And what are the things that we benefit from owning shares? One of them is that when a company is doing well and the directors decide to pay dividend, we also participate in that dividend. And I can tell you, in the recently now, the Nigerian exchange market or the capital market had paid over 1 trillion to various investors as dividend in the year. Let me also say this. I don't know, the majority of us believe that dividend, you have to spend it. You can actually use your dividend to buy more. You understand? It's also an investment strategy. Another thing we expect is what we call capital appreciation, where your company is now growing and the value of the market is also growing. You could also trade your instrument. If you own 10,000 shares, I can sell part of it and keep the balance. And I can also use my shares as collateral for loan. I can easily transfer it. I can easily value it. But in corporate democracy, you can also participate. You have right to vote and be voted for. During AGMs, you can express your view, your opinion on an issue. Nobody will criticize you, even if you own just 1 unit of that particular instrument. And I think this is just the statistics that speaks to the number of stocks. And like the CEO said, I had a date. My one was dated as at 2nd of June. The market has gone up by 8.8%. On the average, if you start analyzing, you will see that some stocks have given more than 200, close to 300% from January to date. But I'll try to do my own, just sharing with you what the market returned last year. You can see some stocks returned over 800, just to give you a full year. Some stocks record over 800, 500, and we also have some because, in the market, you can either gain or you can either lose. You understand? So again, you could have a depreciation. What I'm saying is your investment can either appreciate or depreciate. So as long as we have stocks appreciating, we also have some of them that can also depreciate. Fixed income, generally, it's, your return. I mean, the return is fixed, and it comes in various forms. Who are the issuers of this fixed income? They could be federal government, state government, municipal, or what we call local government. They do that. We have supranational, which are institutions that are outside of Nigeria, like AFDB, IFC. They can also issue instruments in your market, and investors are the people that will buy those instruments. So a fixed income instrument could be the one that have a fixed rate, like a certain percentage is fixed, 16%, 17%, that is a fixed rate. Some can be floating, wherein the rate is a function of another floating rate. Then we have a zero coupon bond. These ones, they don't pay any coupon. And we have what we call investment-linked bond. What do we use bonds for? Majorly, some people will tell you that fixed income you use it for two mandates. Either you are using it for liability management, meaning I have an exposure and I want to put in a structure to pay that liability, or I'm doing what we call total return investment, meaning I want to maximize my investment as far as fixed income is concerned. Generally, people will tell you that you can use fixed income to get a predictable income stream, or you can use it for capital preservation. Like I was telling somebody who asked me that I want to invest in the market, I don't want to take any risk. And I said, you can start. Nothing stops you with your 1 million or less, or anything, 50,000, any amount. And I asked that person, can you buy the federal savings bond? And the coupon that is coming from that, you can start using that to buy equities. By so doing, you ensure that your capital, you're not going to lose your capital, but you can, that original investment, because we're putting it into fixed income, and the return that is coming, the coupon, the regular coupon that you are realizing is what you are investing in other asset classes. By so, you are expanding into multiple asset classes, and you are also optimizing or maximizing your return with your initial capital, secured. But again, you are still exposed to what we call inflation risk. But in terms of you losing your capital, if you do this kind of investment, it might also help. Although the fixed income space, like I did mention, it comes in various forms. Federal government does what we call the FGM bond. Today, there is savings bond, which all of us, the retailers, can participate in. Is as little as 5,000. The return, the one that is going to open for June, I think government is giving about 16 for 2 years coupon, and about 17 and plus for 3 years coupon. So for those of us, we no longer have any reason not to participate, because as far as little as 5,000, you can participate. Government also issue sukuk at the federal level. The recently issued sukuk that was conducted, I think government needed 300 billion, and the investing public gave them 2.2 trillion, meaning that asset class is developing and is also expanding. And the rate on that was about 19 point something percent. We also have green bonds. States are also issuing, Lagos State, Ondo, and Kogi, they've also issued their instrument. And corporates too are issuing. Dangote, refineries, and cement have also issued corporate bonds. So we should also look at this. We can participate, and we can use it to diversify our portfolio. Exchange traded product is also a way, that we bring various exposure to people so that they can benefit from it. Exchange traded products trade like equities. They are also listed, you understand? But most of the time, it is a fund manager who mobilize people's investment and get it listed. So instead of you, unlike mutual fund, where you have to call the fund manager, exchange traded fund is listed and is traded on an exchange. And it can be based on any instrument. Some of them are based, some of the ones that we have listed that I'm going to share with you are based on indices, and some are based on commodities. You understand? The underlying asset can be any other asset class, and you have an ETF. And that is why, most times if you check crypto being listed in other markets, you will see that it is the ETF that most people list there. And in terms of benefit, there is regulatory oversight. If you go through the rules, you understand one of the things we also ensure is that the underlying asset is warehoused through a custodian, and it is also protected. So you are not just trading on something, you are trading on something of value, and that the value is kept. And there's also the trust structure, where somebody is appointed a trustee to ensure that the fund manager is doing what is expected of them. and they deliver as promised. So these are some of the the exchange traded funds that we have, or the exchange traded products that we have. You could, I mean, I always use this example. Look at New Gold. When New Gold was introduced in our market, today New Gold is trading was less than 1,000. Today, New Gold is trading above 40-something naira, 40-something thousand naira today. You know, so these are some of the ETFs that we have that you can also choose from to also diversify your portfolio. One of the things that we also do at the exchange, which I just quickly need to explain here, is that we publish a lot of indices. And these indices, they are a guide, they are a barometer. They help you, you know, a lot in analyzing and appreciating the market. So we have some of them that are all share index. It just mentioned what is happening in the market. Some of them are sectorial. So take, for instance, now, I want to invest in a bank, and I can see that the banking index is growing. Then I can choose that banking index and look at the components of that index. And from there, I can pick, you know, again. So what I'm saying is that in terms of screening, some of these indices also guide you. You know, we have the NGX Lotus Islamic Bank. For that, the pension is there, corporate governance is there, the premium board is there. So please pay attention to some of these indices when you see them and you see their performance. And let me say this, some of the other products that you will see us build will be on this. And I'm sure majority of us will see, S&P 500. We also have our own NGX 30 that will become something, and I'm also going to speak to when I'm talking about derivatives. So talking about derivatives, I'm going to quickly speak to that. We have futures, we have forward, we have options and swaps. You know, a futures and forward is when two people or people are agreeing to a transaction today that is going to be delivered in the future. You understand? That is what we call futures. But futures and forward are similar, except that a futures is traded on an exchange and a forward is bilateral. And you know, when something is between two people, you have the counterparty, and this is mitigated when it comes to, you know, things being traded on an exchange. Options, you know, could be a call, could be a put, and also we have swaps. Now, in terms of what is the benefit, do we even have, so today we have NGX 30 futures and NGX pension is available, you know, in our market. People can trade to it just the same way you trade S&P 500. I can maintain a view that the all share index is going to grow this year. The way I can benefit from that view is actually by buying an NGX 30 futures, you know, that gives me that exposure to say, as the market is growing, I am also deriving more revenue. But what exactly do we use this instrument for? The derivatives. One, I can create a synthetic exposure. Maybe I want to have an exposure and that market is not liquid. I can create my own and I will
you join the retail this thing.
A replica of the liquidity that I'm looking for. I can actually create that. Risk management too. In case I have an exposure. So let's assume I have an exposure in Nestle Food. An analysis is showing that exposure means I've bought Nestle Food, and my analysis is showing that maybe Nestle Food share price is going to go down. I can use derivatives to take a position that as whatever is happening, what I envisage is happening, I have an instrument that as that share price is coming, I am actually profiting. Leverage too is also an opportunity there. It means with a fractional amount. Let's take, for instance, Nestle Food that is trading around 1,000. It could be that for me to buy a derivative in Nestle, somebody is asking for a premium of just 50 naira. With that 50 naira, I can get an exposure to an instrument that is trading at 1,000. Bi-directional profit making. I just maintain a view. I don't even have an underlying asset. There's nothing. I just feel that this year, from what I'm seeing, and everything is pointing to the fact that the stock market will grow, I can just buy a future of NGX 30. And if that is correct, you will see that I will also profit. So the derivative is there. We plan to introduce more single stock derivative, you understand, this year. And as we introduce some of these things, you can also profit from it. Real estate, like I did mention, one of the asset class that is very illiquid. You buy a house, you cannot sell a part of your house. With this real estate investment trust, you are able to bring liquidity into that into that asset class. And today we have some of them listed in our market, and they are trading, and they are also giving good returns. So if you want to buy, have exposure to real estate without necessarily buying land and building structures, you can actually use any of these products to achieve that. So now I've given you some of the products that we run, and I did mention that other products as we make progress, you'll see us introduce them, and we'll come and explain the new products to you. But today, you know our products. How do you now access us? Today, we've democratized access to our platform. And the first starting point for you to have access to the market is via a licensed stockbroker and a daily member firms. Please, I use the word licensed stockbroker. Contact SEC, contact Stock Exchange to know who are the licensed operator, because you need to do that. Don't go and patronize people that are not licensed. Again, we've leveraged on technology a lot. You understand? You recall, for those who participated in the recently banking recapitalization, we deployed a platform called NGX Invest, where people were able to buy shares directly, although by filling form. And we also have the NGX USS code, where you can get information as to top 10 volume and value that is happening at the current moment. Anywhere you go, even if you're not at home, anywhere you are, you can just send this USS code, and it will give you information about the market. Again, we have website. The stock exchange website is full of information, all the disclosures of all these companies and whatever it is they are doing, good news, everything. You can access them through this. And we've organized this in such a way that you can actually mine it and get it clear. We also have issuer. Most of the companies, by our regulation, we also mandate them to have to have a website, and also have what we call investors relations person who manages and provides necessary information. The Security Exchange Commission also have a website that gives you information about capital market. Most of the practitioners, brokers and dealers also have websites that they display information. CSCS, our clearinghouse, they also, have website that gives information about your transaction. If you want to independently confirm whatever is happening to your position, you can just go to web CSCS. They will give you that service, and they will give you that information. One thing that is also very, very important is that we have what we call trade alert. Anything you are doing in our market, whether directly or via your stockbroker, you will get an alert detailing what exactly happened, at what time, what is the price. This is a confirmation. And the rule is this: if you do not authorize, you can contact us immediately. We'll stop that transaction. And if you did authorize, you are getting information that confirms to you what has happened in our market. Again, it's good to say people should come and understand the exchange. You should understand our product. We give you platform and all the channels that you can use to access us. What about protecting your investment? Today, some people are even saying the regulation is too much, but we actually regulate the market. This is a regulated market. Every one of us participating in this market, we obtain our license, from the Security and Exchange Commission. Individual too are sponsored individuals that have responsibility to make sure that people that we are attracting into this market are people that are protected, and nobody is doing any form of harm to them. Even as the stock exchange, we have a subsidiary called NGX Regulation Limited. This is a full subsidiary of exchange, and they have responsibility. They are saddled with the responsibility of ensuring that the market is just, is equitable, market is orderly, everybody is disclosing, nobody is taking undue advantage of the market, and everybody plays by the rule. So they do surveillance, they do investigation, and they do all this. And the truth is that make sure that any product you are investing in, they are also registered. And there is the big brother, SEC, that ensures that the exchange itself is doing what it's supposed to do, and every other participant is participating there. So my last advice is, please, anytime you are creating portfolio and you are trying to do investment, make sure you do them. You invest in products registered by Security and Exchange Commission. You trade through platforms that are registered by Security and Exchange Commission. Thank you for listening.
Thank you so much, Pablo, for that. Shirt of fully loaded, and indeed we are glad. Yes, I have a few questions, but before I start, there's some that are asking about the slides. Yes, the slides will be sent to you. As long as you registered for this series, the slides will be sent to you. And if you want to know more information, we also have the X Academy, where you can learn more about the capital market. And so, Pablo, we have a question, and that is from Simeon, and he is asking, what is the safest and best return products for a beginner in the capital markets?
I think I would say fixed income. You can start with fixed income. And like I did explain, fixed income gives you regular. It brings you closer to the market. Then your returns, that coupon that you are receiving, you can now take that into equities. And if you're looking at it, it's simple. Why I might not be, but again, if you look at the sector that is moving, if you want to participate in equities, like I said, fundamentally, you need to realize the fact that the company you want to invest in is offering a product or a services. Then you ask yourself that simple question: how acceptable is this product? How acceptable is this services? Once you come to that conclusion, then you look at the product. Do they have substitute? Where did they source for their raw materials? All these things we're doing is called fundamental analysis. By the time you're done with that, you could also look at the history of that particular company, which is talking about technical analysis now. How high have the stock gone? How low has it gone? When you do all this analysis, the next thing is for you to contact your stockbroker or financial advisor. They are expert. They'll be able to guide you as to which security you can choose from. But again, like I did advise, you must have your knowledge. You must be able to do some fundamental and basic analysis. Then you combine that with the advice you are getting from your financial advisor, and that will make it a lot easier for you to know the security that you are supposed to invest in. Some companies too, you will see that their raw materials, they even export. And when a company is exporting, it means they are earning dollars. That will also, it might be a factor you want to consider when you are choosing a company to invest in.
Thank you, Pablo. There's one more. This individual believes that mutual funds are categorized under equities, and is asking why is that they should be categorized under 100% fixed income. And he also believes that the class should be categorized separately. What are your thoughts on that?
So, mutual funds, it depends on what is the underlying asset. If I mobilize fund and I'm using it for commodities, you're not going to say it's fixed income. So what is fundamental anytime you are subscribing to mutual fund is to understand what is the fund itself. What is it based upon? Some will tell you it's hybrid. Some will tell you I'm a money market. Some will tell you I do equities. Some will tell you I focus on commodities. So please pay attention. It is that underlying what the fund is all about. The fund itself, the structure will guide you as to if I'm investing in this fund, which asset class am I getting exposed to. But saying it should be classified under fixed income might not, because like I said, a mutual fund is a collective investment scheme, and somebody can basket some, we have some people that can do structured products. So when you're looking at a fund, whether it is open-ended fund, closed-ended fund, mutual fund, exchange-traded funds, just focus on what is that instrument tracking, what is that underlying asset of that instrument. I think that will help you as to where to put it, to classify it.
Okay, great. And then we have one more that says, which inflation-linked bonds do we have operational in the NGX currently?
So today, I think because the issuer are the ones that issue, but today I think what government does in Nigeria is just to ensure that they try to match inflation. So in Nigeria, I think it's not something that is popular. We don't have any yet, but it doesn't mean tomorrow we might not have. But economies where their inflation rate is about 2 or 3%, they issue such instrument. But I think for education for now, that is why we are also saying it's possible. If tomorrow any issuer decides to issue an inflation-linked note, then you might see such products being listed and traded in our market. But for now, The answer is no instrument is listed that is classified as inflation-linked note or inflation-linked fund. But it's good that you know that in some markets, you have such instrument.
Okay. And my final question to you, I know there are plenty coming in. It's that, what's the difference? A bit of clarity in what you said about ETFs and indices. What's the difference between the two?
So you will see if you go back to if you see the slide, you will see most ETFs that we have today are based on index, but we have a new gold that is based on commodities. So indices are created, but to make those indices to be tradable, that is why you see some people say fund index, a fund that is tracking an index. So an ETF is like a fund that is tracking an index.
Okay, my final question to you today, just because we have quite a lot to do, is can retail investors with registered CSCS accounts be able to directly buy and trade investments on the NGX without going through the broker?
So you still have to go through broker for settlement purposes, because we don't want to bring 200 million Nigerians and start tracking them. So that's why you go through a stockbroker. But in terms of executing, trading, the answer is yes, because most stockbrokers now have what we call order management system that they can give you access via your phone or via an app, and you can see the depth of the market, do your buying and buying and selling yourself. But we need somebody to provide settlement or for that trade, and that is what the stockbroker will provide for you. So you still need a broker, but like I said, what some brokers are just performing, the role they are performing today is just settlement. You can now do your execution, because one of the things we're leveraging on technology to do is actually to put you at the driver's seat. You don't have to hand over your order to anybody. You can see the depth of the market, you can do your analysis as you gain more knowledge, and you can do the execution yourself. But settlement has to be done via a broker. That is why you still have to sign up via a stockbroker. And I think all over the world, no individual trades to the exchange directly. You trade via the broker who does your clearing and settlement for you in terms of cash.
Thank you so much, Pablo, for all that. And yes, we'll still come back to you later if we have enough time to answer some of that questions. But we'll go on ahead to the next one. Did you think this was awesome? Oh, we have more. So don't be in a hurry to go. We even have a session where you're going to listen to a panel of experts telling you different things. So don't be in a hurry to go. We also have a part where you answer some questions so that we can help you in different capacity. And I'd like to now call on the next speak, which will be more about fundamentals of portfolio diversification. You've heard about the assets, right? So how do you begin to build this wealth? How do you begin to start ABCD to begin? And no other person to speak to that will be the managing director of Cardinal Stone Securities Limited, Mr. Peter Omorege. Good morning, Peter. Are you there? You're muted if you are speaking.
Yeah, sorry about that. Yeah, thank you very much for having me. And on second, yeah, thank you so much. I would like to thank Mr. Babalola and the NGX. Just what crossed my mind is the beauty of technology these days. He gave a crash course, on equities and investing. Some people have to pay a lesson fee for that, but that is the beauty of this generation, and that is the beauty of, what the NGX is trying to do here. Very much appreciated on behalf of those listening. So quickly, I'll be speaking to portfolio diversification, a practical guide to building wealth. So Mr. Bola has spoken about, the various asset classes. He's done my job, half of my job, he's done it for me. He's spoken about, equities, fixed income, ETFs, mutual funds, and the like. So I'll just be speaking to how you can maximize your portfolio for the long term. So that's something that I'll probably repeat over time is, how do you maintain a portfolio over time? For wealth creation. Wealth creation is not short-termic. It's not, something you do in 1 year, in 2 years, in 3 years, in 5 years. It's long-term. So we're looking to building a portfolio that can take you, reach your investment goals and objectives for the long run. So I know a couple of names have been thrown around, how they've done 200%, 300%, all that. But what we're looking at here is how do we structure a portfolio to build long-term wealth. So quickly, what is a portfolio? A portfolio basically is a collection of assets. So when I say what's in your portfolio, it's talking about what do you have in total. From the perspective of financial markets, we might want to look at, so we talk about the asset classes, but also, we can look at it from the perspective of your total portfolio. Now, your total portfolio will also look at the things you don't own, the things you own, the assets you own that are not probably in the financial market, probably you own a home or something like that. So this is not exhaustive. Again, you would have to speak to your financial advisor. And again, it's not a one size fits all. So we'll just talk generally, try to give some examples of what a portfolio could look like. And it's not a one size fits all. So eventually you still have to speak to a professional on how you can properly structure your portfolio. Asset classes, like I mentioned, Mr. Babola has spoken a lot about that. Equities, stocks, equities or stocks, fixed income assets, alternative assets. So equities, like he mentioned, that high risk, they're seen as high risk. Not necessarily, something you should scare away from, but just generally seen as high risk relative to fixed income, which are more low risk, low to medium risk. Low to medium risk because you get a steady income over time, and hopefully, there's a 90% chance you get your principal at maturity. So portfolio diversification will simply refer to how you hold those assets in your portfolio in a way that they are not correlated with each other. So in the portfolio, we expect to see some equity, some fixed income, some alternative assets, some cash, depending on your investment objective and goals and where you are in life, basically. So you don't expect a young 25-year-old who is just starting off his career, to have the same portfolio type as a 60-year-old man. So different investment goals, different investment objectives. Also, you can both be 25, but one guy has a plan to go to school in 5 years. So he's saving towards that. He's saying, you know what, I'm going to business school in 5 years. How do you structure my portfolio to be able to pay off business school fees? So it's not a one size fits all. So how do we make sure that portfolio is structured in such a way that we can build wealth over time? We can reach our financial goals, our investment goals and objectives. So we'll look at it basically from the asset classes, different types we want to hold in the portfolio. We'll talk later about, what kind of percentages do we want to see, in a typical portfolio that would help build wealth in the long run. We'll probably look at, how do we diversify across industries, across sectors? Do you work in a bank? A portfolio advisor may say, you know what, because you work in a bank, don't buy banking stocks, because if anything happens in the bank, your source of income is threatened and your investments are threatened. So this is just for example. Like I said, speak to a financial advisor. There might be other reasons why you can own banking stocks. So like I said, hedging against the currency risk, you're trying to pay your kids' school fees, you're sending your kids to abroad in the next 3 years. Do you want to structure your portfolio in such a way that you hedge against currency fluctuations because you want to be able to pay that, that fee, or you have some obligations, foreign obligations, and you want to structure your portfolio in that way. So there are different aspects to this. And like I've said, it's not a one size fits all. It's basically, understanding your investment goals and objectives and speaking to a professional, and they can advise on how you go ahead with managing your portfolio. So the major benefit of diversification is it smoothens out risk. So you are not exposed to one sector, and you're not exposed to, any specific events in the markets in general. Yeah, so we can look at recent events in the markets or in the world to see, how they affected markets. For example, recent US-China trade war, that is not over. And you see, if you follow global news, you'll find that most US fund managers are diversifying out of the US because, they were concentrated in the US, but because of this trade war, markets are taking a beating, especially in the US. The volatility is too much. And they say, you know what, we want to try other markets. That will help them mitigate the risk. So if the US is not doing so well, other countries will be able to smoothen returns. So FX crisis is no news. The Naira was devalued last year, big devaluation, and companies, who have USD liabilities paid the price. So you can see how even locally you have to be aware of some of these events. And one way you protect against your portfolio, taking a huge beating when these events happen, is to have a properly diversified portfolio across sectors and across asset classes. So that would also help. And asset classes have been spoken about: fixed income, equities, REITs, real estate. Some of the instruments Mr. Babala mentioned are listed on the NGX. There are a lot of them. New gold ETF, that's alternatives. If you want to, invest in commodities, you track gold with new gold ETF. That's also something you can invest in. So we had the COVID crisis. For that, everything took a beating. Everything took a beating. Most asset classes were all down. Brent went negative. But if you had structured your portfolio in such a way you had some cash equivalents, you didn't put everything in highly risky ventures, you find that if you had obligations at that time, you'd have been able to meet your obligations because you invested in some fixed income instruments. For most countries, it was a case of, yes, everything is coming down, but for Naira, the government could have printed Naira. For USD, the government have printed USD. So your treasury bills, and fixed income instruments were good because they were able to pay coupon as at when due. So basically, portfolio diversification is to manage risk. Manage risk, idiosyncratic risk. So risks that affect, those are specific risks. Like I mentioned, Naira devaluation will be seen as an idiosyncratic risk because it affected a particular sector. Particular set of stock. If you think about it too, if you think of the recapitalization, when the banks were have to recapitalize, there's a bit of tension around that period, and we saw what it did to banking stocks at the time. Even though it has recovered now. So these are some of the risk. Portfolio diversification will help you manage systemic shocks. Okay, oil price is taking a beating. What happens to Nigeria? What happens to the country? If you're strictly in oil and gas names, you might find it very difficult at the time. So a diversified portfolio helps us cushion against, systemic and global market disruptions to achieve better risk-adjusted returns. So to the crux of the matter, building a diversified portfolio, typically we would like to understand, your profile as an investor. Probably your age. Do you understand risk? So these are some of the conversations you probably have with your financial advisor, trying to gauge your risk appetite. Are you more conservative, moderate? Do you have ability, or are you willing to take risk? Ability typically talks about, do you have the resources to even take risk? If you have enough resources, we can invest more in risky assets, because if the portfolios go down, you have a steady source of income that will keep you going. What is your time horizon? For the young guy, probably has longer time horizon. For the old guy, time horizon obviously shorter because it's probably approaching retirement. It's probably looking at life after work, and trying to understand what are your investment goals and objectives. Do you have any investment goals you're trying to achieve? So in building a portfolio, the first thing we want to look at is is asset allocation. How do we allocate these assets? But before we do this, we'd like to understand your risk and return goals. Are you risk averse? What are you how do you stand in this? So this basically will be through questions. Probably pose you a questionnaire to see your responses on questions. Some people are loss averse. They don't want to make losses, but when they hear about returns, they want those returns, but they don't like losses. So if you are that type of person, would allocate more typically to fixed income, or we advise you to allocate more to fixed income. But what we also found out, is that people tend to underestimate or overestimate their risk appetite. Some people say they don't like taking risk, but they are willing to invest in civics. I don't want to see civics. Well, they are willing to invest in a courier business. You are willing to give a malam a bike, to buy a bike to give somebody to drive to do deliveries for you. if you look at it, critically, you understand that that is actually a very risky venture, as opposed to investing, in companies on the stock market or buying treasury bills. Some would rather not buy treasury bills, but rather do that. And it's all about understanding risk. So your investment advisor would hopefully help you understand risk. And if we find that you're a more conservative person, would like to preserve capital, this is typically for people, who are older, who approach 60 or thereabouts, higher, portfolio will be tilted towards fixed income. If you're moderate, mix of growth and capital, growth investment. So talking about equities, some fixed income, some alternative assets, if possible, and capital preservation. If you're aggressive, focusing more on long-term capital appreciation, would do more of equities, for that type of investor. So, like I said, it's not a one-size-fits-all. It's more of, asset allocation, understanding the investor's risk profile, understanding return, understanding if there are any, if you have any investment goals, in the near term, if you have any obligations in the near term, if you have your rent to pay, typically we say, what, if it's your rent, go and put it in treasury bills, don't come and, invest with your rent, because there's volatility and anything can happen. There's the risk of downside, that must be said. There's a risk of making losses in the market, but, so your rent, you want to pay school fees, put that money aside in some, low risk investments, rent, school fees. You want to pay your rent in 6 months. Those type of things how we typically advise for long-term capital growth and wealth creation. So this is part of the building blocks: asset allocation, and how we diversify those assets. So how those assets relate to each other is what I said: equities, fixed income, alternative assets, or what have you. We diversify those assets, decide the asset allocation first, diversify those assets, and continue to rebalance over time to say, it's something you should look at probably semi-annually, twice a year, or annually, depending on your disposition to and what you've committed to the investment. So, like I mentioned, it's always good to know, what conservative. If you are moderate, you're an aggressive investor. Aggressive, it means you have ability and willingness to take risk. You're earning some money, you're earning some good money, you have good source of income. Aggressive also because you can be aggressive if, a slight drop, a 10% drop in 20%, 10 to 20% drop in your assets will not affect you adversely. Because what you find is a lot of people say they're aggressive, but they're checking their price list every day. Stock is down. They're calling you to say what's happening here. So you said you're aggressive. We discussed this thing. So it's to understand your risk appetite. It's to understand how you want your portfolio to be allocated, and we continue to rebalance this. So for people in retirement, early retirement, we tend to be more conservative, which speaks to putting more of that asset in more fixed income, or and more of income bearing instruments, most likely to cover costs. Is to understand what are you doing post retirement, how do we invest your money to make sure that your cost of living is covered as you enter into retirement. So just for illustration purposes, we put together something to say, if you were undiversified or a diversified investor, how did that look last year? And the example we used here was what I mentioned earlier, was the impact of Naira devaluation on some sectors. So if you were, a bit undiversified and you somehow picked some telcos and consumer goods companies last year, you say you invested in that sector, you have had, nasty returns because a lot of those companies could not pay dividends. A lot of those companies declared losses last year, and your portfolio would have looked in the negative. But if you have held a more diversified portfolio, so some, tracking, some you buy an ETF tracking, let's say, the NGX 30, you invested in, let's say, treasury bills or some fixed income instrument, and you were equally weighted. Now, like I said, this is just illustration purposes. You most likely will not be equally weighted in most after speaking to your financial advisor. So it's not a one size fits all, but this is just for illustration purposes to see the impact of owning a diversified portfolio and the other way. So the guy who was diversified, would definitely have done better than someone who just went to pick one or two names on the market because of what he heard somewhere or what he read somewhere. So it's always a good thing to own a diversified portfolio. When you see things happen in the market, you can weather the storm. Oh, COVID happened. If you were invested if you had some monies in cash equivalents, you were fine, especially if you had an obligation at that time. Now it's easy to say, with the benefit of hindsight, to say, oh, the markets have recovered. But at the time, if you had any obligations, you'd have had to take a big loss that would have affected your portfolio size. And going forward, you find that your returns were not good, would not be good enough, cannot compare to one who had a more diversified portfolio. What we also put here is, the returns on an NGX 35-year compounded return on NGX 30, fixed income there, treasury bills, real estate, we use the REIT to get that 5-year compounded return on commodities, reason index, tracking commodities. Now for commodities, like I said, gold, you can also trade that on the NGX, the new gold ETF that captures, performance of gold. For real estate, we have a couple of REITs on the NGX. You can also trade that to track real estate. Obviously, real estate investment is wide, but REITs companies that finance real estate. So it's a good way to hold a diversified portfolio of real estate, as opposed to going directly to buy, which is more expensive. And commodities, like I mentioned, new gold. Yeah. So looking at a conservative, moderate, aggressive investor, this is the kind of returns you'll be looking at, over the 5-year period, depending on how the portfolio was allocated. Depending on how the portfolio was allocated by your financial advisor, and based on what you told them, what you're trying to do, what you're trying to achieve. So it's always nice to hear, a stock return to 200%, 300%, but there's every probability you may not own that stock. But what we're talking about is long-term growth. It's not a one-off. It's not, I die once or, sports bets. It's how do you maintain something that can be sustainable over time? And that is portfolio diversification for you. You can ask any experts, those who have lost money in markets, they'll tell you they were too invested in the market at the time the market crashed. They made so much money and eventually lost it all. That's what happened in 2008. A lot of people were in the equities market because equities market was rallying hard, and everybody caught the bug and put everything in that market. And trust me, a lot of people lost a lot and will never come back. That's why when you talk to some people, they'll say, my father lost money in 2008. I'm not going to invest in that market. So it's okay. But what it is, what you can see, 5-year return, 223%, diversified equities, fixed income. Treasury bills have been north of 20%. CBN trying to, manage rates. So we've kept it quite high, so that's decent. But what equities gives you is, capital appreciation, long-term capital growth. If you're able to identify good companies and invest in them, you get returns in terms of dividends, in terms of, capital appreciation, which is really good. Commodities may not have done so well. Obviously, trade war here, trade war there. It's so many factors. But I'm sure if you check new gold, you see that it has done so well. Gold has done extremely well, but we didn't use that here because we're trying to show you, what a diversified pool will look like. If we had put that here, you would have seen the return of commodities will be very excellent. So, like I said, it's not a one size fits all. It's speaking to your financial advisor. It's understanding your risk, understanding your return, understanding what is due very soon, and in the long run, you will way be better off than someone who is less diversified. Yeah. So, like I said, speak to an investment advisor. Understand risk, return, and what you're trying to achieve. That is the optimal thing to do, the best thing to do. Diversification helps smoothing risk. It doesn't eliminate risk. It helps smoothing volatility in your portfolio. Very important. You do that and look at the market, understand the full spectrum of the market. I spoke earlier about hedging against currencies. You do not necessarily need to buy a dollar investment, although the government did something last year and offered a dollar instrument at 9.5%. They offered $900 million. They sold $900 million, which was fantastic. So if you had obligations at the time, maybe in a year's time, 6 months' time, or whatever it was, 2 years' time, 3 years' time, that would have been a good way to lock in some, not everything, some of your investment, but also to speak to, if you also speak to an advisor, they'll tell you that there are some stocks that also hedge against dollar. If you go and look at it, there are some sectors that they are, I mean, the commodity sector, some of them are priced in USD. So the benchmark is in USD. So if you look at it, you will see that if you had invested in that sector, you would have been able to outperform the dollar devaluation that's happened over time. If you go back and look, you see that some names have done very well in a naira devaluation environment. So it's to explore the full spectrum of opportunities in the market, fixed income, ETFs. These are all available. And like I said, if you understand it is long term, it is not just for short term. You understand that you don't have to, as long as you're maybe, I don't want to say beating inflation. Inflation is, maybe if you are beating inflation, you're comfortable, it's a good level of return to be comfortable with because you're investing for the long haul. So avoid unregulated schemes. We can't say that enough. Like I said, wealth creation is a journey, not a sprint. And continue to stay informed. If you hear, like I said, we balance semi-annually, annually. But if you hear some information, on the markets, you can call your investment advisor to say, how does this affect my portfolio? Blah, 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 that kind of stuff. So so it's not a one size fits all, but it's something to do for long-term capital preservation and wealth creation. Diversify your portfolio. Thank you. I understand this is on YouTube, so we've said a lot. Mr. Babala also said a lot. I think you can go back, watch this, and especially Mr. Babala's part, so you understand the asset classes. Yes, so that's it for me. Thank you, Gochi.
Thank you so much, Peter. And indeed, I like what you say, stay informed, stay empowered. And that's why we encourage you to always join our investor education series so that you can learn about what's happening, the current trends, and also join the X Academy so that you get much more informed and have opportunity to ask all your questions. That said, Peter, there's a question that's asking that when a stockbroker via a licensed stockbroking firm fails in its obligation, his or her obligation, what happens? What do you do?
So I like to understand the obligation, but most times, I mean, people in these firms are human. So what they typically do is rectify such issues. So if you'd asked your stockbroker to buy a stock or do something, maybe they missed it. If you bring it up, we would rectify it. Which is buy it back or do whatever it has to be done to make you happy, to make you whole again. Yeah, we will do that, and goes as far as taking the losses if there's any loss to be taken. So that
yes, it was in terms of losses when they lose money. And they're not getting any more investment from their shares or their investments.
When they lose money, so if you invested with a firm, so that is why you must understand whatever you're buying. Someone asked a question about mutual funds. You must understand the underlying assets, what they are tracking, because sometimes these funds may be created for whatever reason. So like fixed income, equities, or for example, we probably have an ETF tracking maybe consumer goods. If you had invested in that ETF last year, it will look as if it's the broker, but there were some specific risks that affected that sector. So you must, first of all, understand what you're investing in. Speak to the advisor instead of just going to buy. Speak to them. What are the risks involved in this type of investment? And they'll probably explain to you. So I think that's the perspective the person is coming from.
Indeed, and that leads me to my final question to you for now, which is, what category is an infrastructure debt fund, and why would one consider it?
Yeah, infrastructure debt fund is a fund that finances infrastructure. So, so it's a fund that, for example, they may be building a road somewhere, but for an infrastructure debt fund is a lot of projects. So it's not just one road, but finance projects. So yeah, if you like the return profile and if the fund has done well over time, why not? And you like debt also, like debt would typically offer returns over time. So infrastructure debt fund is a fund that finances infrastructure projects. So a lot of projects. So they raise money to finance a lot of projects, viable projects. So they do their research, and they would only invest in projects that are viable, that are profitable. So you can invest in that because you like that sector. You've done your research and it's a good one.
Thank you so much, Peter, for that. And yeah, there are more questions, but we are answering them. And again, after the session, we'll send answers to your emails. Thank you so much. And now you heard about asset classes, you heard about portfolios and how to create them. But the question begs, how do you then go about crafting resilient portfolios? What are the strategies? And I would like to call on Ayomide Oguntoye, who is the Communication and Engagement Officer here at the Exchange, to please call up the panel of expert speakers that are going to address this topic. Ayo, are you here?
Yes, I am.
Fantastic.
Hi, Rishi. Thank you so much. We had an interesting session so far. Good morning again, everyone, and I hope we are all enjoying this NGX education series, investor education series. When Mr. Peter came on, he had said that Mr. Pablo had given a crash course, and then he came on and then he topped it up. I think that for this panel session, what we are going to do is now to make this cup overflow with a number of information that we'll be passing across via this panel session. I have a very interesting list of panelists that would be speaking to us today on the topic, crafting resilient portfolios, a strategic assets allocation for diverse investor portfolio. Please allow me to quickly introduce the panelists for this session. First, on the regulator side, we have Mr. Abubakar Abib. He is the head of Market Development Department at the Securities and Exchange Commission. Good morning, sir. I can see your turn on your camera. Thank you for joining us. We also have... Thank you very much. We also have Mr. Abimbola Babalola, who was spoken earlier on, the head trading and products from NGX. We have Cardinal Stone from Cardinal Stone Securities as well. Mr. Peter Omorige had just spoken to us just a few minutes ago. We have from the CSCS, we have Mr. Babakida Yahaya. He is the head depository services at the Securities and Exchange Central Securities Clearing System. And we also have Ms. Oluwatoyin Aju. She is the senior portfolio manager, Stanbic IBTC Assets Management. I can see that we're all turning on our cameras. Very good. Thank you all. And then we have Mr. Aibubiose Aikimokwede, the President, Fund Managers Association of Nigeria. Thank you all for joining us today. It is great to see your beautiful faces. So I'm going to start with the regulator from the SEC side. We understand that market confidence is undeniably central to fostering a thriving investment environment. And the SEC obviously plays a crucial role in ensuring this. So now that we're seeing that more and more Nigerians are now accessing a diverse range of asset classes through the Nigerian exchange, now could you please speak to us about the specific and robust investor protection measures the SEC has recently implemented. And then we're particularly interested in how these measures are designed to safeguard retail investors, especially given the evolving landscape of investment opportunities available to them. Yeah, Mr. Abubakar, please.
Thank you very much, Ayo Oguntoye. And let me first and foremost congratulate NGX for this noble initiative of capacity building program for retail investors. I again bring you greetings from the Director General of the SEC, Dr. Momotimi Agama. At the Securities and Exchange Commission, of course, investor protections remain the cornerstone of the Commission regulatory mandate, especially as small Nigeria today accessing a wide range of investment products through various platforms. And the Commission, of course, in recent time, has tried as much as possible to implement several robust measures to enhance those investor protection, particularly for our retail class. And in one of those areas that we felt that the regulator should exercise more of his authority is the area of surveillance and compliance monitoring across market. Of course, this will help us to identify and address infractions swiftly. The measures, of course, include our regular routine inspections of market operator, of course, real-time transaction monitoring as well. And of course, in not doing that alone, not physically, we equally use a data analysis to detect and of course, check where potential misconduct, of course, could arise. And again, in the area of trying to protect investors and the new implementation that SEC has equally put in place, again, of course, it stems from a risk-based supervision framework. Of course, SEC has tried to implement a risk-based supervision model that, of course, enable it to concentrate its regulatory attentions and the scarce resources that it has at its disposal on a higher risk entity or rather sector. Of course, this by, of course, improving efficiency and, of course, timely response to issues. Again, in the area of that investor, retail investors protection, SEC, of course, came up with a lot of campaign. I'm sure a lot of us that are watching me from various terminal will see that I'm on T-shirts. And of course, that speaks to our investor education campaign. Of course, recognizing that these investors make better decisions, the SEC, of course, has expanded the investor education initiative. The Commission conducted nationwide campaign through radio, televisions, and in fact, taking our campaign to various market across Abuja city. And again, we intend to intensify this effort through other locations, especially where we have most of our market operators. And we're not doing this alone. We're doing this in conjunction with a lot of our market trade group association. This, of course, is to better inform the investors in the area of protections. Again, of course, our whistle blowing and complaint framework is well enhanced. The Commission has, in recent times, strengthened its complaint framework with the inclusion of online portal, which allow investors to lodge and track complaints. This program also, of course, has helped us to provide incentive for reporting unethical transactions and behaviors in our market. The market, of course,
Biba, are you still there? I think we lost him for a moment.
Is doing weather transaction. The SEC has, of course, released regulatory framework covering crowdfunding, robo-advisory services, and virtual asset providers to ensure technological innovations is accompanied by adequate safeguard for investors. These, of course, are put in place to protect our retail investors and, of course, give our market the confidence it deserves. Again, in order not to move alone, there is what we are doing that we call that collaborations with the law enforcement and the regulatory body. The SEC currently works with a lot of agencies like the EFCC, the CBN, the Nigerian Deposit Insurance, the Nigerian Police Force, and a whole lot of other law enforcement agencies. Of course, these are created, these relationships are built for the purposes of what? Protecting our retail investors. In all, one would say, in conclusion for me, at the SEC, I think our reaffirmed commitment is to create a fair and a transparent capital market. Of course, these measures align with global best practice and represent a proactive step toward building a lasting investor confidence, especially for the same retail participants navigating the Nigerian and evolving the investment environment. For us as SEC, investor protection is very cardinal to us. And in doing so, we have listed out some of these clear initiatives, which the market is aware. All the players in this industry are clearly aware of this. and we'll continue to do more. In the area of fintech, of course, you know that the SEC has come up with a lot of regulations. And the good news for us today is that we have a new law. The 2025 Investment and Security Act, of course, is the new sheriff in time, which of course has elaborated the coverage of SEC. And all these regulations and the laws are clearly designed to protect investors, to give them the assurance that this market has the integrity and the regulator is not just on top, but is on top. I would want to stop at this. I already thank you for this opportunity.
Thank you.
And
Thank
the
you
tech
very
is
much.
ever ready at all times to collaborate with all the trade groups and all the SROs in the area of capacity building. Thank you.
Thanks so much. Thank you, Mr. Habib. I mean, I can attest to the investor education campaign that you spoke to. If you check SEC's social media, you'll see that they are really doing so much when it comes to in the area of investor education campaign, especially to retail investors, and how they can also be aware of Ponzi schemes. I mean, most of the campaigns have been tilted towards Ponzi schemes, so yeah, I can attest to that. Thank you very much. Now to the exchange side, Mr. Babalola. The Nigerian exchange has indeed shown impressive growth with the market capitalization surpassing 66 trillion as of Q1 2025. Last month, I think it was a little bit over 70 trillion, yeah, thereabouts. But then we've still seen that there's still a bit of persistent macroeconomic challenges like the high inflation and, of course, the foreign exchange volatility continuing to concerns for these investors. Now, in light of these uncertainties, and especially with the prevalence of these Ponzi schemes that I actually just spoke about, and then promising people unrealistic returns, and we saw what happened during the CBEX time. Now, how is NGX leveraging its diverse multi-asset platform to not only assure investors that it can build sustainable wealth, but also to provide a platform that is well-regulated and transparent, and of course, fostering greater investor confidence?
Thank you very much, Ayomide. You will agree with me that at NGX, we are actively involved with investors, whether you are retail investors or institutional investors. We try as much as possible to understand what the financial needs will be. That is how we create these various asset classes to cater for investors' needs. We leverage a lot on data and research, and you'll see that in the course of this webinar, we're also putting forward a questionnaire that is to look at our existing product and see whether there are other products that the investing public will be interested in. And even if we introduce one, we try to see it from the risk and the return point of view. We do all the necessary analysis. And I think like the Security Exchange staff said, before a product is introduced into the market, we go through a lot of research, analysis, and also the necessary approval. So if you look at for us to increase because we try to attract and retain, one of the things you see is that we come up with products that caters for anybody and everybody. That is why you see that some of the instruments with as little as 5,000, 1,000, 2,000, you can participate in the market. Not only that, we have regulation. We have rules that constantly monitor and ensure that all participants are doing what they are supposed to do. You know, for listed companies, it is disclosure, disclosure, disclosure. For fixed income, we have structures in place such that investors are getting what they are supposed to get as at when due. Another thing is we see investors as king. You know, it is our standard, it is in our philosophy. Everything is our mandate is to assist and allow investors to grow their wealth. And that is why if you look at anybody that has been following this market, you will see that we started with 1,000. Our index was 1,000 in 1984. We've gone high, we've gone down low, we've put in structures, we revamp our rules, streamline our processes, you know, leverage on technology so that people can participate and be at the driver's seat. Investors' education is also key. That is one of the reasons why we're doing this. You understand? To educate the investors, let them know, because we believe that an informed investor is the one that is well protected. Because if I know the right thing, if I know the processes, nobody is going to be able to put me at a disadvantage. When you also build confidence, in case anything happens, you'll see that we have what we call investors fund, trust fund. You know, in case anything happens that is not as a result of investment decision, you have a fund that caters for that. Today, anybody, you know, if you want to participate in our market, if you have your mobile phone, so you understand the product, the rules and the rules governing it is clear, you are protected, like, you know, Sec said. If anybody have complaints, we have a complaint resolution framework for that. We have people in surveillance that are monitoring the market, building trust and confidence. And that is why you could see in the last 5 years, you understand, the market has been giving good returns, whether it is fixed income and whether it is ETF, whether it is at the ETF, almost all the asset classes have been giving good returns. So we'll continue to do this. We'll continue to streamline and make sure that our processes are efficient so that at the end of the day, we're not only attracting investors, but we are retaining them and we'll continue to be with them in their journey towards creating a sustainable wealth. Thank you.
Thank you. So we're not only attracting retail investors, we are doing everything possible to retain this investor. Now, coincidentally, today happens to be World Environmental Day, and I want to ask a question relating to ESG. Now, investing in this part of the market is rapidly gaining momentum worldwide. Now, according to Bloomberg Intelligence reports, there's been the global ESG assets that have been projected to exceed $40 trillion by 2030. Now, considering this growth trend, now how is Nigerian capital markets evolving to embrace ESG principles, and what opportunities are available for retail investors to create sustainable and resilient portfolios aligned with these values? In 1 minute, please.
Thank you very much, Ayomide. I think we saw this opportunity, and if you remember in 2017, we partnered with Ministry of Environment, with DMO and every other person to issue the first green bond in Africa. Today, we're doing a lot as far as disclosure is concerned. Most of our companies are also disclosing as to what they are doing with ESG, you know, and today we are creating products. Stock Exchange has also launched what we call the Impact Board. You will start seeing us creating sustainability linked notes. All these products we eventually try, you know, with the Impact Board being there, as the board is growing, we will introduce an index. With an index, an ETF can be created either based on ETF or mutual funds to mobilize retail funds that will invest in that space. It's a huge space and it is growing, and we are going to come up with products that will allow retail investors to also participate and also share part of the growth and blessing that is associated with that new concept in terms of financing.
Thank you, sir. Thank you, Mr. Babalola. Now, let me come to the market intermediary side. Mr. Omorege, are you there? Yes. Now, so as a trusted intermediaries connecting retail investors, now you've spoken to this earlier, but just for people that will probably say that they did not hear you or didn't pay attention to the part where you spoke to it about it. Now, to make this as practical as possible, now when you spoke to how's it called? What's it called now? Like extensive, could you walk us through? So now let me take a question. Could you walk us through how to evaluate and understand different investor profile? Now, how would your asset evaluation or asset allocation advice differ when working with say a 25-year-old and then probably like a 55-year-old that is close to retirement?
Thank you, Emide. So, like you said, I mentioned earlier, but to understand an investor profile, we'll typically look at it from, you know, your ability and willingness to take risk. Ability meaning, do you have the resources to even take the risk? Willing, are you willing? Do you understand risk to a certain level? Then also would typically look at the time horizon. Time horizon is how long do you have? You know, a longer time horizon will typically assume you can, you know, you have the, you know, you can take risk, because you have enough time to recover if you have any losses. If you know, so for a longer time horizon, investor will say, okay, you have a good time. So you typically, for a longer term horizon, like the 25-year-old tech investor would be a bit aggressive. So you're 25, you're in tech, you're earning good, you're getting good income, so you have some ability to take risk. So would typically be aggressive, and structuring a portfolio for you would typically advise maybe, you go at 5%, 80% in more risky investments, so equities, ETFs, but a diversified portfolio still in that space. So we're looking at, dividend paying stocks, we're looking at growth stocks. So a well-constructed portfolio for you. You're buying ETFs, you're tracking, if you want to do new gold. So a well-diversified portfolio in equities would typically allocate maybe an 85% to that, more risky assets, and any other risk assets that may come, depending on what the investor is also trying to do. Also, maybe the balance 15%, we're looking at, cash generating assets. So just, that we're well diversified, we've done risk 85%, then maybe a 15% to do more fixed income. So guaranteed income to meet, expenses. That is how we typically structure for a 25-year-old approaching retirement. So moderate risk. At this time you have lesser time to work, lesser time to generate income. First of all, also is to understand your risk return. At that time, maybe you've invested, you bought a house, or you're buying a house, you're building a house, is to understand where you stand in terms of total portfolio. But from financial assets perspective, 40 to 50% in equities will make sure they are dividend paying stocks, so that you're getting income. If you want to invest that income, all well and good. If you also want to use that income to meet some expenses, all well and good. How long do you want until retirement? You also want to invest to see post-retirement, what are your expenses? What are your expenses like? How do you intend to cover these expenses? Can we invest in a bond, or an asset that will generate income to cover expenses post-retirement? That's something to consider. What do you think your expenses will be like if you have a house, you're not paying rent? What is it? Are you paying school fees? What are you doing? What can we do in terms of, because at this time, we think you have ability to take risk. You've worked for maybe 30 years, 20 years, and you made some money. So how can we invest this money to make sure post-retirement, you're good in terms of covering your expenses? So for a 55-year-old, moderate to low. So we'll still do some equities to generate some income, and also to encourage for capital growth and wealth creation. And for the balance, we'll put in more fixed income generating assets to cover, expenses going forward. And like I said, it's not a one size fits all. It's understanding the various investors and understanding where they stand in terms of what they have in their total portfolio and their investment goals and objectives. Yeah, thank you.
Fine, very well said. I mean, I absolutely agree with you. Just like we would say, the higher the risk, the higher the returns, and then whatever it is you can take your bet depending on the investor. Now, there's also the part where people consider the fees and transaction costs that comes with this, costs such as brokerage commissions and management charges, which obviously have significant impacts on portfolio performance. Now, from your perspective, what strategies do you recommend for retail investors to optimize their asset allocation in a way that balances and minimizes cost while still achieving meaningful diversification?
Okay. One thing Mr. Jude and the guy from SEC didn't say the man from SEC, sorry, is that they charge fees, which is regulatory fees, which are standard. Again, these businesses have to be run. The platforms have to be run so that people can invest. The major strategy I would advise any retail investor to do is to just have a plan towards investing. So if you don't trade for a living, that in and out thing, it looks exciting, but it can be very costly. And that is where transaction cost comes in. When you're buying, selling, what we'd advise is have a strategy towards investing for the long term. For the long term, which may be every month, you receive your salary, you put this away, what is good? If you check with your investment advisor to say, are we still good? Is everything still working as planned? Yes, have a strategy towards investing, but when you trade, you would definitely pay those charges. So if you're not an expert in trading, or you don't trade for a living, we typically advise you to stay away from that. Just have a strategy towards investing. So is it every month, every quarter, I'm going to put this away from my salary? That is better, and that's how you minimize transaction costs. But if you trade often, you must consider buy and sell charges. NGX is taking their fees, SEC is taking their fee, my salary has to be paid, the research analyst has to be paid. So, that is inevitable, But I know the exchange is here. So the fees, I think, have been brought down to reasonable levels. SEC is also here. So would advise have a standard approach to investing. Don't trade if you don't trade for a living. Those who trade for a living make more than their transaction cost. Yeah, thank you.
Fair enough. Fair enough. Thank you very much. Now we'll come to the clearing and settlement side. Mr. Babangida Yahaya, are you here?
Yes, I'm here, Ayomide.
All right, thank you. Now, we understand that many retail investors are concerned about how quickly their trades are executed and completed. Now, given the important role of CSCS in clearing and settling trades across equities, bonds, and the money market instruments, now, could you explain in simple terms how people can easily understand this, how our current T+3 settlement works, and what happens within that 3-day space and after investor buys or sells like a security?
All right, thank you very much, Ayomide. Let me also thank the previous speakers for, setting the tone for these conversations. I think it's been very deep and enriching for me as a panelist as well. And let me, speaking about settlements, let me just start by saying that, official settlements are very critical to the stability of markets, not only because it brings finality to a trade that has been done on the exchange, but I would say that it also engenders a lot of market confidence and ensures that there's a smooth operation of the financial system. And so, as it is with every settlement cycle, for a trade that is executed on an exchange, there's typically a sequence of critical steps, right, that occur between this the trade date, which is day T, and the settlement date, which in our own case, for our own market, is T+3 for equities and T+2 for fixed income. The reason why these steps are taken is to ensure that these trades that have been done on the exchange pass through a process of proper confirmation, clearing, all leading to an eventual seamless delivery of both securities and cash to the positions of the respective parties that trade. So just to take you through the settlement cycle overview of T+3 for our own market, you have a scenario where on day T, which is a trade date, a trade is executed on the floor of the NGX, either by a broker or a dealer. This trade goes through a matching and confirmation process on the same exchange, after which the trade information is then transmitted to the central securities clearing system for further clearing and settlement. Now, starting from that day T, which is a trade date, through day T+1, T+2, and then T+3, when this final settlement eventually happens, the CSCS begins the clearing process, from that day T. And this clearing process entails, several things: the computations of settlement obligations, financial obligations that have to go to the bank, and even including the notification of these obligations to various participants. So, for example, on that day T, right, when these net financial obligations are computed, these obligations are sent to the various participants from the brokerage firms to the custodians, and even the settlement banks, right? So that it also helps them with their own reconciliations in-house. Now, again, within this period, of clearing and settlement, the settlement banks are allowed a window to confirm that, cash positions of the parties with due obligations on these settlement dates are funded. And the reason why this is important is because where any of such account is not funded, the bank is expected to escalate to the CSCS so that certain measures can begin to kick in almost immediately. Again, the importance of this is, in trying to understand the importance of this, we need to take our minds back to the fact that we operate a no-fail trade market, which by implication means that, executed trades cannot be seen to fail, cannot even be said to fail at all, right? By implication also means that our market is actually a pre-funded market, which entails that, investors who are looking to buy should have the security, should fund their positions ahead of the trade. And likewise, investors who are looking to sell. So all of this process, allows for a very seamless settlement to happen. In addition to, ensuring that, settlement is guaranteed, the CSS has long established a very effective default management system just to ensure that, these potential risks are mitigated. By day T plus 2, a final and net settlement advice is also sent to banks reporting their final and irrevocable settlement obligations. On the T plus 3, cash payment is made to the seller's account, and the securities are also delivered to the buyer's account. I think that sort of really captures what it is that happens, over the period of T plus 1 to T plus 3. Now, question is, can the process be more efficient? Absolutely.
Now, speaking about if the process or how the process can be more efficient, I just wanted to lump this together, so you just speak to it together now. In other clients, what we see now is there's probably like T plus 2, and some are even looking to T plus 1 kind of thing. Do we see, or are there any ongoing initiatives or technological improvements that CSCS is trying to implement or to potentially shorten the settlement process, whereby we move from T plus 2 to T plus, whereby we move from T plus 3 to possibly T plus 2?
Thank you. That's a very, very good question. And very relevant as well. The matter of reduction of settlement cycles, I would say is a growing global trend, that is largely driven by the need to reduce risk, increase efficiency in the market, and even, in keeping with pace with advancing technology as well, right? So, for example, the United States market has transited from T plus 2 to T plus 1 cycle since May 2024, right? And even both the Canadian and Mexican markets also coordinated with the US in making this transition. In India, in fact, India even moved to T plus 1 since 2023. The UK and European markets are currently on T plus 2 and looking to further transit to T plus 1. So, this is a global trend, right? And obviously there are benefits to it. We see that settlement cycles are, harmonizing, across the globe. But the good news is that, our market is also now left behind, right? And let me just give a quick background. Over a year ago, the Securities and Exchange Commission granted a no objection to the CSCS to actually set up a market committee to review the settlement cycle for our own market. This committee, is composed of representatives of critical market participants, drawn from the brokerage community, to the custodians, exchanges, registrars, fund managers. Name it, right? And the committee commenced its work immediately, with the charge of, reviewing the settlement cycle of market. This committee then made recommendations to the SEC for the settlement cycle for our market to be reduced to T plus 2, 9 months from the date of approval by the SEC in the first instance, and then subsequently, to transition from that T plus 2 to T plus 1, 6 months after the transition to T plus 2. I hope that's a bit clear. And as many of you may have seen in the circular recently released by the SEC, the Commission has actually granted its approval for the market to transit to 2 plus 2 no later than the end of November 2025. This same committee has long swung into implementation mode. They are guided by a detailed implementation plan, which is also being closely tracked by the regulator. And the reason why this is very important, again, as right, shorter settlement cycles, directly translate to reduce risk, enhance liquidity, and to bring it home. I think my own personal opinion would also be able to attract a certain demography, right, of our own market, which is the younger ones that have not, really participated so well. We see that there's a lot of potential for them to to participate deeper. And we're talking about retail investors here, right? This younger generation of investors, as we'll see, are more aligned with options that are closer to instant gratification. So nobody really wants to wait for 3 days to have to receive their proceeds of their investment when they could otherwise get in real time from other some of investments. So I would say let's watch this space. Bigger things are on the way for our market, and by the end of November 2025, we would have a market that would have moved, to at the minimum T+2, in line with the approval of the SEC.
That's fair. Thank you very much. Thank you very much, Mr. Yahaya. Now I'll move to, now it's also good to note that, also good to hear that we're looking towards moving to T+2 settlement cycle for product. That's really good to hear. Now to move to the Stanbic IBTC Asset Management, Mr. Oluwatoyin Aju. Now, one of the biggest challenges Nigerian retail investors today face is the Naira volatility, which has many people worried about protecting their ardent savings while still keeping their investments accessible and affordable. Now, given your expertise, now how would you help a Nigerian investor build a diversified portfolio beyond just buying individual stocks, and what practical investment options are available, whether fixed income securities or ETFs or mutual funds or even any other instruments do you offer that allow investors to spread their risk across different asset classes without requiring huge minimum amounts?
Okay, thank you, Ayomide, for the question. I hope you can hear me. Yeah, good morning, everyone. At Stanbic IBTC, we recognize that many investors, especially the retail investor, want to grow their wealth. And they may not have that large capital base or deep knowledge of the capital markets, or generally of the financial system, to build that wealth individually. So to help retail investors diversify effectively, we offer a wide range of professionally managed investment options that would give investors access to different asset types. Example is the investment in fixed income instruments, ETFs. We have heard Mr. Babalola and Mr. Omorigi speak a lot about the different instrument options in the market. So we would offer you the different investment options. There are mutual funds, and there are different types of mutual funds that are specifically tailored to the different investors' risk appetite. So that is why it is important that a retail investor understand their risk appetite, why they are investing, how long the investment will be. For starters, because retail investors are starting to grow, and because of the minimum amount, that is required for large investment, right? For starters, retail investors are advised to begin to start investing in mutual funds, because they are simple and convenient ways that retail investors can reduce their risks. That's diversification, and also increase the potential returns available on investment. So, and these investment vehicles, the mutual funds, would offer you liquidity, whether you are investing for the short term, medium term, or long term, right? For example, a balanced fund would combine investment in equities, bonds, money markets, and that will help you diversify on the local stream, right? A fixed income for investors that are just saying, I just want to be able to see my investment grow steadily. That is a predictable fund for, especially for investors that have low risk appetite. Then you can move to other types of mutual fund. We have the equity fund that would invest in stocks in the capital market. And Mr. Omorike also mentioned that if you're an aggressive investor, you are looking to have a long-term capital appreciation, right? But there's also an element of volatility. So if you, depending on your risk profile, your age, how long you are investing to, you're planning to invest, how long you are investing for, right? There is a fund that is tailored for retail investor. And the best part is that you don't have to have millions, right, to start. With as low as 5,000 naira, you can start investing every day if you want to, or periodically. Then aside the mutual fund, we have other investment options tailored especially to retail investors. You have the treasury bills. You can also have access to the regular federal government bonds. There's the FGN savings bond that Mr. Bimbola mentioned, with as little as 5,000 you can begin to invest. So you can explore any of these investment options. But importantly, we prioritize investor education because we ensure that our client understand their risk profiles, and that will help them to determine what kind of investment that is suitable for them, or the kind of fund, whether you're investing in mutual fund or you're investing in direct investment, which should I be investing in, and why am I investing in this? So we do those assessments in helping them to determine what investment, and then help them to diversify. So whatever investment option that an investor goes for, we ensure that you're selecting one that helps you spread your risks and will help you meet your financial goal. And then just to mention that it's also important that retail investors have a structure around investing. I don't want to invest because everybody is investing. Why are you investing? Have a plan. Am I investing is it an emergency fund, or am I investing to buy a house? Am I investing to buy a car? Am I investing to go to school? And then you have to be disciplined about it. If you start with a 5,000, whether you're investing in a fund or you're buying a savings bond, then you must ensure that you do it consistently, because that's how you build wealth successfully. Thank you.
Very well said. Thank you so much. I mean, I picked on the 5,000 because you mentioned that 5,000 about 2-3 times. Now, when it comes to the F-man side, Mr. Akinfide, are you here? Yes. So now, Andrew had mentioned 5,000 like 2 times, 3 times. Now, for a retail investor watching today and who's ready to begin this investment journey that we've been talking about, with a modest 5,000 naira, I mean, my GMD will probably mention 1,000 naira. Now, with this 5,000 naira, or let's say you even have maybe a little bit above that, say 10,000 naira or 20,000 naira, and approaches you after this webinar to say that, okay, I'm ready. Now, what are the practical steps you would advise them to take, and how can they gradually grow this 5,000 naira to probably 10,000 naira, 100,000, 1 million, and thereabout, go on and on, into a well-diversified portfolio that remains resilient even in the face of our market volatility?
Thank you, Ayomide. And again, thank you for the keynote speakers, all the speakers, as well as panelists. You've made my job extremely easy. This has been a very educating and in a very simple manner session. All right, so look, first of all, it's great that you are ready to start. If you approach me, it is truly great that you're ready to start. The truth is that, as you've implied, you don't need millions to begin investing. With as low as 5,000 naira, you can put your foot in the door. So the first thing I would say to you is that, first of all, you need to understand that in these days of Ponzi schemes, you must ensure that you know what you're doing. So if you go to the SEC website, the SEC website speaks to all the registered fund managers in Nigeria. It also, the Funds Managers Association has a website as well as an app called the F-Man Hub, which also speaks to the registered fund managers in Nigeria. So what you then need to do is get the details of a fund manager, or additionally fintechs and other registered parties, and visit them, talk with them, speak with them about the opportunities, look at your risk profiles, and pick what fits you. I would always like to recommend that people start with a money market fund if you are new to investing, because of the nature of it and the nature of the process of it. So you pick up your mutual funds, you pick up your ETFs, and then because you understand that funds in themselves are a means of diversification. And so for people who are just putting their foothold into investing, you have the opportunity of getting diversification from professional fund managers, investment managers who manage these funds. Also remember that these funds are all registered by the Securities and Exchange Commission, and we publish as FMAN in this day on a daily basis the performance of our funds. So you can also go to our published page at this day to see the performance of funds, to know what you get into. But then, as was noted by Tony, it is also important for investor education. It's important for you to understand your risk management, your risk profile. It's important for you to understand what you're investing in and what your options are. I would recommend that in investing, the practical thing to do, after visiting your licensed fund managers through an app or a website or through their aggregators, noting that we have now started, which was alluded to by Mr. Babalola, that we've now started providing easy ways for investing through our apps and other digital functions. You need to, as was also noted by Tony, you need to start to invest on regular contributions. You need to be committed. So you do regular, I would advise regular as opposed to lump sums. You are committed for whatever it is that your investment aim is, your objective is, but you are disciplined and you continue to, you can do 5,000 a month, for instance. So you can continue to, over a period. Investing is, even though you do have goals from time to time, investments, I believe, are a long-term game. And so you should continue to invest. And over time, as you continue to invest and you grow your value, you then start to diversify the kind of investments you make. Also, and now this comes also with the education that you get, because of course, we've spoken to several investments here. We've spoken to investments like debt infrastructure funds and rates and so on and so forth. The deeper you go in investments, the deeper education you need to have. The SEC, of course, I mean, clearly the NGX and all the trade associations partnering with the SEC are really fighting to improve investor education, and particularly from our perspective, Fund Managers Association, to eradicate the drive for people to seek for quick money by going to Ponzi schemes. So what you need to do over time is that once you've built your base, gradually add your funds. This gives you exposure to equities. It can give you exposure to rates, infrastructure, as you continue to grow and as you continue to grow. But I would recommend that at your core portfolio, you consistently look for low-cost index funds or money market mutual funds as you start. Now, when you speak to market volatility, all right, so markets dip normally, but a well-managed fund, like I'd emphasized before, your funds are managed by professionals, investment managers, and fund managers. A well-managed fund helps you to stay disciplined, and that's what the fund managers, that's where they come in, to make sure that they take the tough decisions so that you don't have to. So you focus on your long-term strategies and don't react to the short-term market fluctuations, and let your fund manager do that for you. It is also important that you have a balanced approach in everything that you do, whether you're taking both the Naira and foreign currency investments as you hedge against currency depreciation and so on and so forth. Continue to regularly consult with your fund managers, your investment managers, your stockbrokers, depending on what line you took.
Very well said. Thank you so much. I mean, one thing that was pertinent in what you have just said today is the importance of education, investor education. Continually ask, make your research, do not just depend on whatever you see. Have a better understanding or a good understanding of what you are entering into. We have a number of questions, and I'm just going to scan through to pick just a few because we are way beyond time. I think I'm going to ask this from the NGX side. Mr. Babalola, are you there?
Yes, I am there.
Okay, yeah. So someone is asking, can one access, let me see. Okay, can one access all these NGX products from all the registered stockbrokers? Okay, so the person is asking about our NGX products, right? So how can this person access all these products? Can you access these products from all registered stockbrokers?
I think I would say it's not all stockbrokers but this is how I approach this, my response. Every stockbroker should be able to trade on all the products that is listed at NGX. So if you approach them, they will be able to tell you whether they are involved with a particular product or not. But they have the ability and the responsibility to offer you such a product. So my response would be that yes, all stockbrokers should be able to access these products that we've explained today. Thank you.
All right, thank you. We have one other one. This one is addressed to CSCS, Mr. Yahaya. Can retail investors with registered CSCS accounts be able to directly buy and trade investments on the NGX without going through a broker? I don't think I quite understand the question.
Yes, I think Mr. Babala rightly addressed that earlier. And if I may draw on what Mr. Babala rightly explained, he did say that a lot of brokers have sort of democratized access into, the trading platforms. They've perhaps built interfaces that they can extend to the retail clients for them to be able to access the market. But he did mention that the one of the key reasons why you need a broker is because of settlement, because settlement will perhaps have to go through a brokerage, firm, especially where it is not a direct cash settlement. So I'll just re-echoed what Mr. Babola rightly explained earlier, and I hope that addresses the question. Thank you.
Well, thank you. I have one for Mr. Omorege. Is he here? Yeah, he's still here. Can you hear me, Mr. Omorege?
Oh, sure. I'm still here.
Okay. So someone is asking, I invested in bank recapitalization through NGX, but I'm not seeing it on my brokerage accounts. How can I get all my shares purchased?
So if you invested already, it's to check with your broker, because when you invested through NGX, you must have selected a broker. And if you didn't have a CSCS account, you should have been, asked to open one. So you should check with the stockbroking firm you invested through, and the one you selected while you were investing via the NGX, and they will get it sorted if the shares have not been allocated. Yeah, they should be able to get it sorted.
All right, thank you so much. I think that's the last question I'm going to take. At the base of all of what we've talked about today is the investor education, the importance of learning, finding out, doing your own research, asking questions. I think that's on the base of what everyone has said today. And this would also be available on YouTube. So if you need to rewatch, so pick out certain things that you probably missed, it will be available on our YouTube session. Thank you so much. Ugochi, back to you.
Thank you so much, Ayo. It was so interesting. And thank you to the experts that spoke through the session and through the panel time. We're indeed grateful. A lot of questions have come in, and we are going to still come back to you to ask you for those answers and then send them out. But one thing, people, that have been said over and over again by these experts is that no matter how you want to invest or what you want to invest, investment education is important. And that's why we work tirelessly to bring you this investor education series. So please do not miss the next one. And again, the X Academy is available for you to learn much more in depth and ask all the questions you may have at that point in time. Now, I told you earlier when we started that we asked and we listened. Now we want to ask again. There is going to be a survey that's going to be pushed out now, and we'd like to hear from you. What do you want to hear about again? What are the issues you're having? We want to make sure that after this series, you will move a step further. You will begin investment. You will begin to speak to your licensed stockbrokers. You do not go into the MMMs anymore. You do not lose money. So for us to help you achieve that, we have the series, we have the X Academy, and now we have deployed this webinar survey that I would like you to answer so that we take your information and then we know how to support you at any time. So do not just set it aside. Fill it in less than 2 minutes or less than 1 minute. You will be done. And that's our way of reaching out to you where you are and getting you sorted to make sure that if you have invested, forgive me, you will get your money. And if you haven't started, these are the steps to help. So you can see the experts that came in, they took their time, answered the questions, and are ready to help you in any way they can. But for us to help you, you've got to give us the information needed to help you to do that. So while that is going on, please, please, please help us to fill that. And while that is going on, I would like to call on Wisdom Emmanuel, who is a product officer with the Trading and Products Department of the NGX, to give us his remarks. Wisdom, are you here?
Yes, I am. Thank you, Uchi. Thank you, everyone. Thank you, distinguished ladies and gentlemen. As we bring this insightful and engaging webinar to a close, I would like to extend my deepest gratitude to each of you for making today's event a success. Your active participation and thoughtful contributions reflect your commitment to unlocking the full potential of your investment portfolio, and also, most importantly, strengthening Nigeria's financial landscape. Today's discussions have shed a lot of light on the power of multi-asset investing, offering valuable insight into balancing equities, bonds, ETF, real estate investment trust, and other capital market products to maximize our returns, while most importantly, managing risks. Our esteemed panelists and speakers have provided a solid foundation for each and every one of us to understand how strategic diversification can empower you to navigate the dynamic investment environment with confidence. Let me also use this opportunity to reaffirm NGX steadfast commitment to fostering an accessible, transparent, and inclusive investment ecosystem. We once again remain dedicated to collaborating with our esteemed partners, the Securities and Exchange Commission, Cardinal Stone Securities Limited, Stanbic IBTC Asset Management, Association of Securities Dealing Houses of Nigeria, and also Fund Managers Association of Nigeria, and the Central Securities Clearing System PLC, and every one of our stakeholders here today. We will always continuously empower retail investors into achieving their financial goals and contributing to Nigeria's economic growth and development. So our retail investors who have joined us today, this is the moment for us to act, because we've been equipped with the right knowledge shared today, and I believe that we are all well positioned to make informed investment decisions, diversify our portfolios, and also capitalize on the opportunities that are available within this Nigeria's dynamic capital market. Thank you, everyone, once again for the engagement. And today, I believe that we can unlock the immense potential of multi-asset investing to drive Nigeria's economic advancement. Thank you all, and do enjoy the rest of your day.
Thank you, Wisdom. And remember, this session is on YouTube, so you can go back and listen to it over and over again. And our previous series are also on the YouTube channel, the NGX YouTube channel, and you can listen to them again and again and again. And a reminder that the X Academy is here to support you in every way we can. That said, I wish I could see your faces, but I'd like to say thank you and see you next time, and bring a friend next time you're joining the series. So with that, bye and thank you. And please wave, even though I can't see you, let me know that you're waving back at me. So bye and have a wonderful, wonderful, thank you everybody that opened up their video. Thank you so much. Bye everybody. We care and we are here to support you in every way. Thank you. Bye.
Thank you. Goodbye.